The S&P may have notched back up over the last few days after investors just regained some of their confidence in the market. But as we all know, as investors, not all stocks are created equally, which is actually good news for all of us longer-term investors. Therefore, today, I'm going to be sharing 3 dividend stocks that I have been hyper-focused on this week that are nothing but buys according to, well, me. With that, are you ready? So as you know, or at least as you should know, our latest economic news from a hotter than expected CPI report to a very hawkish Federal Reserve holding interest rates steady certainly rocked the market as a whole after we recently hit some record-breaking higher highs. And moreover, based on all of that data, 3 dividend stocks in my actual portfolio faltered, sounding the buy alarms for me. Now, each of these companies I'm about to mention to you would certainly feel the pains of, say, some more penny pinching given our economic environment. But at the end of the day, as long-term investors, I want these companies, believe it or not, to be buys for you and me today for the long-term hold. After all, red days today are green days tomorrow. Now, if you're confused about that, I encourage you to subscribe to the channel and follow along on my journey. But if not, let's just get rocking and rolling with the first dividend stock here. One that I absolutely have been loving lately. It's McDonald's, ticker symbol MCD, which I don't think needs much of an introduction, but it's worthy to discuss that McDonald's relatively recently just raised their prices on their menus, given the environment that we are in, while also battling some minimum wage matters that ultimately hurt their profit margins. Now, what matters most ultimately for McDonald's comes down to the menu price hikes, but heck, a quarter here and $1 there, I'm confident that this fast food behemoth will just continue to attract more McLovers out there. So as the stock falls here, it's now down about 5.5% on the year, trading for $278 per share, down from almost $300 per share not too long ago. It's looking better and better. And zoom out here with me to see over 269% worth of appreciation over the last 10-year period, which is just to say remain long-term on McDonald's, especially as the analysts foresee a smooth recovery with the stock climbing back up to $325.19 per share. It's about 16+% worth of upside, with hedge funds who have been loading up on McDonald's rather recently as well, and we even see a solid share buyback program going on at McDonald's corporate. But as for us dividend investors, let's just go ahead and enjoy the dividends. Coming in dividend yield here for McDonald's at 2.4%. That has been on a streak for the last 47 years and averaging all about 15% worth of growth year over year. Now, if McDonald's is perhaps a little too expensive for you, the stock share price that is, there's always Darden Restaurants, that's ticker symbol DRI, which has been in my portfolio now since 2020 and has really remained just a dominant performing dividend investment for me, given their business model as a restaurant operator within the United States, with some of the most popular restaurant chains underneath their operation, from Olive Garden to Longhorn Steakhouse to the more fancier Eddie V's to the Capitol Grill and Seasons 52, really gifting all of us shareholders with some diversity. But Darden also has been forced to raise some of their prices on their menus while in this economic environment, and they've also just been experiencing more of this consumer penny pinching that's been going on, given Darden is not your fast food drive-through, requiring diners to actually come out, sit down, order food, and pay a little bit extra for that family night out. However, I think Darden is in fact protected by their popularized restaurant brand, so as Darden stock falls from $174 to a low here of around $160 or in that range, I'm here to buy it, especially with a PE ratio back below 20 at 19.4. Zooming out here with Darden, we see plenty of appreciation, over 382% over the last decade. Now, as I mentioned, I added Darden back in the lows of 2020, so I've certainly just been keeping this one in my portfolio and enjoying all the dividends, while analysts just continue to project more upside, over 11.3% worth of it coming Darden's way to $181.13 per share. But let's get back to the dividend insights here with Darden. We see a 3.22% dividend yield, some steady growth year over year, averaging about 23% worth of that growth on average over the last last 20 years. And now if we jump out of the restaurant industry for just a hot second, one of my 2024 stocks and focus stocks has actually again trickled down in the last handful of days. Visa, ticker symbol V, our transaction facilitator there, collecting fees after every single swipe by us consumers. Just a forever buy now, trading for $281 a share from $290 plus per share not too long ago. Up, however, on the year here by 8%, and zooming out, we see over 458% worth of appreciation over the last decade, all while analysts continue to remain quite bullish on Visa, with over 10% worth of upside forecasted from here, with an expected share price to hit $310.06 per share. Now, Visa is going to be the dividend growth MVP on the list today, coming in at a 0.74% dividend yield, so not quite as big as the other dividend players here, but 18% worth of growth year over year for the last 10 years, while on a dividend streak for the last 15 years, and definitely plenty more growth ahead. And there you have them, 3 dividend stocks that I've been buying the past few days, but now I'd love to know what exactly you've been up to this week, what stocks you've been buying or at least have in focus. Comment down below to let me know. Definitely go ahead and click over to catch more insights right here, but before you do, subscribe so you at least are prepared for all the videos to come.